Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. And our website is www.stochastic-macd.com. The title of the video is Stock Trading, How to Trade Dow Jones Stocks, Part 2. Right? Stock Trading, How to Trade Dow Jones Stocks, Part 2. In Part 1, we were analyzing Caterpillar stock. We were also talking about the implication of market leaders when one is trading Dow Jones stocks. All right? So we know that there are 5 market leaders for the Dow Jones, which we have already discussed in the first part of this series of video. I will not dwell on it because I don't want the video to be too long. But today we will look at another market leader. So last time we were looking at Caterpillar, which is a market leader for the Dow Jones index. Today we will look at IBM stock, another market leader for the Dow Jones stock. We have in total 5 market leaders for the Dow Jones stock. If one is trading Dow Jones stocks, one must constantly pay attention to the 5 market leaders, okay? One will also pay attention to the Dow Jones index itself. This is something to do with what we call the trading triangle. This is the key to achieve consistent winning trade. So if one is trading, for instance, a stock, okay, that is listed on the Dow 30, for instance, Pfizer stock that is listed on the Dow 30, one will pay attention to the 5 market leaders. One will also pay attention to the Dow Jones index. But when we are talking about the trading triangle, we are talking about the market itself, which is the S&P 500. And then we are looking at the Dow Jones index that is representing the group, okay, the index that represents the 30 blue chips in America. So S&P 500, Dow Jones index representing, okay, the group of 30 stock. In this case, we will call the Dow 30 itself as the sector before we look at the financial instrument itself. So this is one of the challenge that a lot of ordinary traders, average traders do not know. But the professional, okay, are applying this method every time that they are trading. They pay attention to the market first, they pay attention to the sector before they analyze the financial instrument itself. Apart from these, steps, we also pay attention to what I call the inside of the trading triangle. Inside the trading triangle, we have the market leaders, the fundamentals, and economy news. My trading approach is very simple, always combining the fundamentals and, okay, the technical analysis. One will always check the economy news. So you are trading, for instance, Pfizer stock, you check the economy news relating to Pfizer stock at Google Finance or Yahoo Finance, very, very important. You will also check the financials and perform at least what we call Google Finance Assist test. Check the video about the Google Finance Assist test on YouTube, georgetrio channels, okay, georgetrio channel, okay, check that video, okay, and you will know a little bit about, okay, the Google Finance Assist test, all right? So let's continue with our discussion today. Stock trading, how to trade Dow Jones stocks, part 2. In this video, we want to analyze the IBM stock. As I've said to traders many times before, all right, professional traders trade around key levels or trade on or near key levels. You will very often see a surge in trading volume as the price is near a key levels. So if you pay attention to the volume bar on a monthly chart, on a weekly chart, on a yearly chart, you will notice that very often when the price is at a key levels, okay, a major resistance or a major support level or equilibrium price level, you will see a surge in trading volume. This surge in trading volume is highlighting, okay, the surge in trading activity by the big institution, the hedge funds, okay, the pension funds that are coming into the market. So if you are looking to analyze the book, okay, the market book, talking about the buying orders and the selling orders, you can know where we will see a surge in buying orders and a surge in selling orders. They will take place around key levels. That's why professional trade around key level. In this video, talking about stock trading, how to trade Dow Jones stocks, we will highlight the key levels that we need to pay attention to when we are trading the IBM stock. IBM stands for International Business Machines Corporation. All right. So if you are using computers, okay, you will know about IBM. Okay. Ordinary traders, in contrast, use the slow stochastic, okay, the RSI, the CCI indicator, these are momentum oscillator, MACD indicator, to make trading decisions. But a common trading mistake or a common investment mistake is to trade these indicators instead of trading the price. Another mistake is to take a signal in the void. So if what I say to traders very often, all right, especially TSCW34 traders, you see a buy signal, ask yourself, is this buy signal taking place on or near a valid support level? All right, you see a sell signal, you want a sell signal to be on the edge of a valid resistance level. All right, so you see the market like this, ordinary traders are losing consistently, professional are making money, because if the professional are making money, they will lose their job. They can afford to lose consistently. All right, so that's why they make decision to buy at a reliable support level and to sell at a reliable resistance level. You will be surprised if you start, paying attention to the key levels, monthly chart key level, yearly chart key level, quarterly chart key level, weekly chart key level, and switch into, in the lower time frame. We can identify, a key level for a stock that we are trading on the monthly chart, and then switch even into the 3-minute chart for day trading, or we can identify a key level from the yearly chart and switch to the 50-minute chart and use our slow stochastic or the CCI indicator or the MACD to trade around those key levels without violating the market patterns. All right. So the first key level that we must not forget for the IBM stocks throughout 2015 is the long-term equilibrium price level. This level will remain in place throughout 2015. That level is the pink line here is at 17285. I recommend to traders that are trading IBM stock to have a notebook, all right, and to note those key level down, because this allows us to navigate through the market. We want to know where are the resistance level, where are the support level, all right? So we can navigate through the market without getting too much into trouble, okay? So first key level that we must not forget is a 17285. That's the pink line here. The next key level that we should not forget, in fact, my apology to traders, I did not share this video with you as early stage, because this week there was some beautiful signal here to buy, a buy here, another buy here. This is the short-term equilibrium price level. It's at a 15914. This level will remain in place for a week or so. The reason why I say a week or so, normally it's 2 weeks, because 1 week is already gone. All right, we are halfway now. Okay, so this is the second week. We are now in the second week, so it will remain normally. The short-term equilibrium price level will remain in place for 2 weeks or so. It can remain in place for 3 weeks or more, but very often after 2 weeks, the short-term equilibrium price level will change. But sometimes it may not change. So that's why we must pay attention to this level of 15914. It was in place since last week. This week again. You see now the price continue to go. What has happened here is that you can see that, as I told you, the price is always going from point A to point B. You can see, in the month of April, it went up from, the short-term equilibrium price level. Now, today, you can see it went near the long-term equilibrium price level. It's not by mistake that traders start taking profit here. They know that this is a key level. Professionals know that this is a key level. It went from the short-term to the long-term equilibrium price level. If we want to be bullish, all right, we can look for opportunity to buy above the short-term equilibrium price level, break above the long. We can look for opportunity to buy above the long-term equilibrium price level, break above, retest, turn around. That's one scenario. All right. So we have talked about two key levels when we are trading stocks, okay, that are listed on the Dow 30. In this case, we are analyzing, okay, IBM stock. So break above, retest on the hourly chart, and find a support right here. This will be what? A bullish trade setup. We will now use what we call a top-down trading method, TSTW34 trader. Once we see a valid bullish trade setup, we go to the first best time frame to take signal on the edge, okay, around key levels. All right. If another place to buy is near the median line, you see, the median line is the middle line between the short term and the long term equilibrium price level. Okay, but you need to be careful. As I say to traders always, if you are buying near the median line, be careful because there's a high chance that the price may consolidate between the long-term equilibrium price level and the short-term equilibrium price level. So this median line, be gentle here if you want to buy. All right. By the way, this video is not a trading signal to buy or sell IBM stock. We are talking about stock trading, how to trade Dow Jones stock. Part 2, we want to know how to trade like a pro using the key levels, all right? We have talked about the long-term equilibrium price level at 17285, the short-term equilibrium price level at 15914. Let's move on now. So from the, I'm going to move now to the yearly chart. What do we do on the yearly chart? You should know it now. Anytime we are trading a stock that is listed on the Dow 30, okay, we will check, okay, the yearly chart of the S&P 500. We'll check the yearly chart of the Dow Jones Index itself, highlight the high, the low, and the median line of the previous year. So in this case, 2014, the candlestick bar on the yearly chart will highlight the high, the low, and the median line for the S&P 500, the high and the low and the median line of the Dow Jones Index itself before we start analyzing the stock that we are trading, in this case, IBM stock. All right. So on the yearly chart, according to the definition of the uptrend, the primer display higher lows and higher high in an up move, okay? In a down move, the primer display lower lows and lower high. So in an up move, we want the financial instrument, we want the stock, the Dow Jones stock to display a new higher high, okay? Very important. Now, in a down move, we want the stock to display a new lower low compared to the previous low. So if you're on a yearly chart, we want the price to display a new higher high on the yearly chart that will confirm the strength of the bullish momentum on the yearly chart. But if we are on the hourly chart, we want the price to display a new higher high on the hourly chart, which means the previous high should become a support on the hourly chart, and the price continue to display a new higher high. So if the price fails to display a new higher high, it's an indication of a weakness. But it doesn't mean that the trend is finished, but it's an indication of a weakness. All right. So looking at this IBM stock on the yearly chart, we can see that the stock this year, this is 2015 candlestick bar on the yearly chart. I have too many drawings, but I need to tell you more. So because the pink line is the long term, the orange line is the short term equilibrium price level. Do not get lost, okay? So we highlight the high of last year. This is the 2014 last year. So the high of 2014 is at 11921, okay? 11921. Note it down. The low of 2014 is at 15050. Note it down, okay? And now the median line for that candle is almost equal to the long-term equilibrium price level in this case. All right. So we can see that. So when we see a yearly candle, so the bullish momentum should be strong above the median line of the range of this candlestick bar, which is 2014. So we will say priority to bullish signal above, okay, the median line of 2014 candlestick bar, and priority to bearish signal below the median line of the range of 2014 candlestick bar. If you look carefully here, this year, 2015, the price went a little bit below the low of 2014. All right. It went a little bit below, but found a support and went back up. Why? Why the price found a support here? Pay attention to the trend line, okay? What have I said to trade? In order to achieve consistent winning trade, one must not violate the market pattern on any time frame. So on the yearly chart, what is the market pattern? What is the current market pattern? The current market pattern is a rising channel. Can you see? It's the blue channel. You see the blue channel, the bigger channel? You see the bigger channel? So I join this point and the low of this candle here. This point. So if you like, I join the low of the year 1994, okay, to the low of the year 2008, okay. All right, that's how I draw my first line, a low and a higher low, okay. Then I selected one point here, which is the high of 1999. I selected the high of 1999 right here, and I draw a line that is parallel to the first line that I have drawn here. So I have my bigger channel here. Then I draw the median line, which is the middle line here. Okay, it's the blue line here. I'll color in now, running out of ocean now, into green. Okay, so you see the green line here. I think I'll change that color now to a different color, turquoise. You see the turquoise line? That's the median line of the blue channel. So this year, 2015, you see how professional trading on the edge around key levels. The price was near the low of 2014 and also retesting the median line of the blue channel on the edge. Can you see it? That's where they buy it this year. The price now going up. You can see now we went up, and this week we are just touching the long-term equilibrium price level. There is a high chance that professional may take profit. There will be a kind of profit taking on or near the long-term equilibrium price level until it breaks above, retest, and turn around, as I've shown you already on the hourly chart. Do not forget what I've said already. Do not forget. Okay, this is the hourly chart. You remember what we said? All right, it makes sense? All right? Okay, this one. So you see, we went from the short-term equilibrium price level. So we are here now. So there's a high chance that they may take a bit of profit here. And so the price will adjust itself if before, okay, resuming the trend. But this is a resistance zone. Right? It's not by mistake. They push it here. Now they will take some profit. This is a conversion point. They will take some profit. They will take some profit. All right? They will take some profit. The price may slow down a bit. It may slow down a little bit and then push it up. But there will be a kind of slowdown here, which means the market will acknowledge this pink line here, which is the short-term equilibrium price level for IBM stocks. All right? Let's go back again to the yearly chart. So we have seen it now for the yearly chart, the key level that we need to watch. In fact, the key level number one, okay, is what I like to call support level one. Support level one is the low of 2014. So note it down. Support level one is the low of 2014. It's at 150.50. Resistance level 1 is the high of 2014, all right? It's at 199.21, 199.21, okay, right here. The ultimate resistance or the ultimate greediest bullish target, if it get there one day, all right, if it get there, is the high of 2013 at 215.90. 215.90. You want to note all this level down. Why? Because as a day trader or swing trader or position trader or investors, you want to know where is the IBM right now, IBM stock, talking about the price. Where are we? Are we at a resistance level? Are we at a major resistance level? Are we at a major support level? What's going through the mind of the hedge funds? Are they willing to take some profit now? Or is it a better place to buy again? All right, because the price is always moving from A to B. These are major key levels that we need to know. The long-term equilibrium price level, the short-term equilibrium price level that is changing constantly. The long-term equilibrium price level doesn't change very often throughout the year. It may change twice, but it remains in place throughout the year. We want to know the high of the previous year, the low of the previous year, and the median line of the previous year. All right, I can go on and on and on and on with other key levels, talking about the 6 critical price level that you can check on Google. All right, but I don't want to confuse you now. So far, we have talked about the long-term equilibrium price level, the short-term equilibrium price level, resistance level 1, resistance level 2, the ultimate resistance, which is the high of 2013, okay, ultimate resistance at 21590. Apart from the resistance level, we have, another ultimate support level. Pay attention. The ultimate support level is the high of 1999. The ultimate support level is the high of 1999 at 138.35. 138.35. So if the price found a resistance here, and couldn't find a support above the long-term equilibrium price level, and continue to go down, the ultimate bearish target is the high of 1999, at 138.35. Do not forget that in order to achieve consistent winning trade, one must not violate the market pattern. What has happened now is that the price, has pulled back to retest the low of 2014. So it went up, so it's from here, went up first, and then pulled back to retest the low of 2014. Found a support, now it start going up. As the price going up, the price looking for a better resistance level. But do not forget the median line of the blue channel, we are above it. So if the bullish momentum continues, this is a bullish zone because we are above the median line of our blue channel. To achieve consistent winning trade, we must not violate the market pattern. This is a bullish zone, so we will give priority to bullish signal. But we cannot afford to buy anywhere, anyhow, hoping that, everything will be beautifully for us. But we will trade using a top-down trading method. So identifying a valid trade setup, and then we will validate the setup on a higher time frame, and then we will switch to the signal time frame, wait for signal, and then we'll select a low risk entry point without violating the market pattern on any time frame, checking economy news and the fundamentals. It's not complicated. It's just one step at a time. One can achieve consistent winning trade by following these steps. So in order to trade Dow Jones stocks successfully, one must constantly trade around key level. In fact, if one is trading any stock listed on the major indices like NASDAQ 100, Dow 30, FTSE 100, or CAC 40, or the DAX 30, when we apply the same method, the market first, the index, and the financial instrument, then the market leaders, the economy news, and the fundamental. But each trading decision should be made on or near key levels, as I'm showing you here, without violating the market pattern. So here, the market pattern is a rising channel. Not only that, we are above it, but the price now at a resistance level. If I want to buy now, where we are now, as we have seen us zoom into it on the hourly chart, there's a high channel price may roll it back down. So either I buy it here near the short-term equilibrium price level, or it break above, the pink line, run away fast, and then pull back to retest, find the support before we take it up. If one is buying near the middle line of this channel, the orange and the pink, lines, one needs to be careful, gently, it may work beautifully, but it's a bit risky here, but it may work beautifully, so be aware of that. It makes sense? It makes sense? So you see now, we see on the yearly chart, we see the bigger picture now. So that's why I like the yearly chart, because I want to see the key level, because sometimes you are trading on a daily chart, weekly chart, monthly chart, and if you do not see the yearly chart, I'm scared to trade financial instrument that I cannot see the yearly chart, because a lot of information are hidden to me. It's like a driving blindly, You may hit a wall, You may hit another car. We don't want to do that when we are trading, when we are investing. Okay, ordinary investor, very often we just come and buy because the stock is going up. There are stations, so to speak. We don't want to jump on, okay, board a fast train on a track. We want it to pull to the station. Here it is. You see, it went now fast, running fast. You see the tall candle highlighting the volatility here. And now it pulled back nicely to a station on the edge of the media line. Professional responded on or near a key level, which is the low of 2014, and prior testing also the media line of the blue channel. They will apply a top-down trading. So on the yearly chart, this is a bullish trade setup. So they will apply now a top-down trading method, okay, checking the economy news without violating, okay, the market. You see here, this is on the weekly chart. You drop it down to touch it here, and then from there, professional took it, and here it is going up nicely. Even if you're going to gamble to buy and hold, these are the best place one can buy and hold. If you have checked the fundamental, you are a fundamental trader, you've checked the fundamental, you do all your verification, you are happy to buy, please do not violate the market pattern. Buy at the best place, at the best time, at a station, so to speak, where the risk is low. All right. So here, this is one example here. One example right here. Okay. Pull back at the station, as I like to call it, or at a spot trading zone. All right. Go to stochasticmarket.com. Watch every video at okay, market trading zone. Watch every video about hot spot trading. Watch every video about trading on the edge. This will allow you, okay, to make excellent decisions, okay, at a low risk entry point. Check also the convergence signal. It makes sense? Let's see how long I've been talking to you now. 26 minutes, not too bad, my friend. Let's continue with our discussion. So we know that the market pattern, which we cannot afford to violate, okay, on the yearly chart, and also, as you can see, on the monthly chart for IBM stock, is bullish. So we know also that IBM stock is a market leader for the stock that are listed on the Dow 30. So for instance, if I'm trading Microsoft stock, all right, here it is. In fact, it's a first wave pulling back nicely in the second wave. We'll see how far the second wave will pull back down. That's a different matter. But if I'm trading Microsoft stock, okay, and I receive a buy signal, I want to check also the 5 market leaders. At least I want to see 3 of them, because 5, the majority of them to be bullish at least, okay, because I know that the market leaders will influence the Dow Jones itself. Then I will analyze Dow Jones itself, okay, the index itself. Are we having a bullish signal? So in fact, we're looking at the S&P 500. Is it at a resistance zone or is it at a support level? What is the current market pattern on the monthly chart for the S&P 500? Okay, great. It's bullish market pattern. It's at a support level. Dow Jones index, market pattern, current market pattern, bullish. Great. At least those verifications will allow us to align our strategy. So I don't want to sell Dow Jones stocks when Dow Jones is giving me a bullish signal, or when the market itself is at a support level, pull back at a support level, and professionals are ready to buy. I want to be busy looking for opportunity to buy, okay, Dow Jones stocks. On the other hand, if the market is bearish, which means price, okay, rally went down first and then rally into a resistance level, and I receive a sell signal for the market, sell signal for the Dow Jones index, check the market leaders. At least I want 3 of these 5 market leaders to be bearish together with the market and S&P 500. I will be busy, okay, screening for Dow Jones stock that are bearish. And I want to trade in harmony with the market, with the sector, without violating the market pattern. I am not saying that it's not possible to trade sometime against the market, but when you are doing that, you must have a fundamental reason, economy news, okay, all right, some valid fundamental reason to trade against the market, which means a stock can go up even though the market is going down, all right. These are defensive stocks, which is something else I don't want to talk about in this video. But the general strategy is that we don't want to fight the market. We want to flow with the market. Therefore, if you are trading a stock that is listed on the Dow Jones index, we want to trade that stock, we want to buy that stock when, okay, there is a bullish signal for the Dow Jones index, a bullish signal for the market itself. Market first, the sector, before the individual financial instrument. We will pay attention to the economy news, the fundamentals, and the market leaders. All right? But the most important thing for day traders and swing traders, one cannot achieve consistent winning trade if one is constantly violating the three market pattern on each time frame. You receive a buy signal, ask yourself, is this at a support level? If it's not at a valid support level, walk away, all right? If the risk is high, walk away, all right? If the time of the day is not suitable, walk away, all right? It makes sense? All right? Too much fight does not help, okay? Let's go back again to IBM stock, which is in fact a stock listed on the Dow 30, but not an ordinary stock, a market leader like Caterpillar, okay? It's one of the 5 market leaders for Caterpillar. So one cannot trade any stock listed on the Dow 30 by ignoring the 5 market leaders such as, okay, IBM, okay, Caterpillar, McDonald's, Boeing, okay? All right? It makes sense? And ExxonMobil, okay? So far, we see now the market pattern is bullish, we see now. So these are the key levels that we must watch when we are trading, okay, this IBM stock. Trader will also want to know about the volume bar. Recently, for IBM, we see this surge in trading volume. As I explained to trader, you want to know more about the volume trading, go to dayprotrader.com, click on volume stock trading, all right? We have normal volume. This is a surge in trading volume on the weekly chart. When I'm using a volume bar, I prefer to use it on the monthly chart, weekly chart, and higher time frame than the monthly chart, okay? So this is surge in trading volume. More than 60 million share has been transacted at this point in time. Stop, cap down. If this is truly a bearish momentum, the price will find a resistance here and continue to go down. But when we see a red volume bar, doesn't mean that these are definitely sellers. We will wait. We just pay attention to the price. How do we know? Draw the channels. Draw the channels. The channel will tell you whether these are bulls or bear. Wait patiently. If they are bulls, you will see a higher low somewhere above the long-term equilibrium price level. If they are sellers, draw the channels. Okay, here. You see, very straight line. They are sellers. Well, we'll see if we come to this point on the edge. Okay, we don't assume anything, just step by step. It makes sense? All right, so I want to zoom into it more because we're going from the yearly chart. So we can see that recently in this zone here, there was a consolidation between the long-term equilibrium price level. All right, okay, and the resistance level 1. Okay, this is the resistance level 1 in the zone of 19921. So on the weekly chart, the price was oscillating. It's not. We can divide it into 2, all right, like this, but just accept it that it is between the pink line, the long-term equilibrium price level, and the resistance level 1. So now the price D below the long-term equilibrium price level, and it went back to retest it here. So will it find a resistance here? So what has happened here, which you need to understand, the price failed to find a support on or near the long-term equilibrium price level, went to the short-term equilibrium price level, now is retesting, okay, the long-term equilibrium price level. We need to pause here and use a top-down trading method to trade here. The price will go in one way or another, it will go down or up. But how do we know? We'll zoom into it, go to the lower time frame, I'll go to the 2-hour chart and see whether there's something there for us. Okay, still waiting for my charts. Okay, this is on a 2-hour chart. Each time we change time frame, we ask ourselves, what is the current market pattern on a 2-hour chart? It's a consolidation. So I can say the top of the consolidation is 16547. Are you with me? 16547. Okay. All right. So I don't want to draw another line. So, all right. Or if you like, we can choose between, okay, this red line and this one here, okay? 150, support level 1, the red line, support level 1, 150, 50, and the long-term equilibrium price level. There is a kind of move here. So this is what we see on the 2-hour chart. So it will make perfect sense. If you receive a sell signal here as a day trader, we will take it gently. Okay, if you pull back a bit near the median line of the orange, we take some profit. We are day traders. We want to take profit consistently. All right. For swing trading, in this scenario, if I want to swing trade, either it break above completely the long-term equilibrium price level, pull back and retest it, okay, then I would like to buy there. Or the price pull back completely near the long-term equilibrium price level again, and I receive a valid swing trading signal, a bullish trade setup, then I'll take it from there. If it's a bearish trade setup here, we'll use a top-down trading method again. This is a hot spot trading zone. We use a top-down trading method to follow the price without fighting it. Again, on the 2-hour chart, nothing should stop us to draw lines on our chart. So this low and this low here. It makes sense? And there is another one because the momentum, okay, is increasing. Another here, another channel here. So as a day trader, using TSCW24 or any other valid trading system, we want to take signal on the edge. So you see on the 2-hour chart, I draw this first trend line, this low and this low. Here again, this low and this low here. All right. Now what can we do? You choose just one point here and make it parallel to my this blue line here. Are you with me? Let's color it now in a different color. I will use a turquoise. It makes sense? It makes sense? All right. It is also powerful. Ladies and gentlemen, this is the end of this video about stock trading, how to trade Dow Jones index stocks. Part 2. In this video, we were analyzing IBM stocks, stressing on the point that professionals are trading around key levels. We talk about the long-term equilibrium price level for this stock that is listed on the Dow 30, IBM stock. The short-term equilibrium price level will remain in place for the next 2 weeks or so. It's at a 15203. The long-term equilibrium price level will remain in place throughout 2015. It's at a 17285. The support level 1 is at 15050. Resistance level 1 is at 19921. Ultimate support, which means if the price continues to go down, the ultimate greediest bearish target is at a 13835. The ultimate bullish target, if the bullish momentum remains strong, and we have a new trend that is continuing, all right, the ultimate resistance is at a 21590. On the 2-hour chart, as you can see here, we have this channel here, and we are on the edge. If you receive a sell signal near the long-term equilibrium price level, okay, but price going down, pay attention to this. The first support is somewhere here, okay, in the zone of 16547. It makes sense? Okay, so on the edge, the further resistance may break below this level and then further resistance here and continue to go down. Be ready to buy and be ready to sell, but in each case, apply a top-down trading method without violating the market pattern. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down, but put a comment below why you disagree with us. If you say, George, okay, this is lovely video, I like it so much, feel free to share it on Google+, on Facebook, on Twitter, on the social website. If you say, George, you have made my day, okay, I will embed it on my website. Feel free to embed this video, okay, in your website so other traders also may learn from it. Feel free to subscribe to our channel, all right? And so you do not miss any of our videos. This is part 2, stock trading, how to trade Dow Jones stocks. Thank you for watching, and we will speak to you very soon. We are the TSTW24 traders talking about stock trading, how to trade Dow Jones stocks. Part 2. In this video, we are analyzing IBM stock, which is a market leader for the Dow Jones stocks. Speak to you soon. Happy trading to you all.